London main board, small cap oil company, Canadian Overseas Petroleum has just announced what it calls a transformative deal. Let's catch up with the chief executive now, Arthur Millholland, who joins us on the line here from London. Arthur, good to talk to you. Just explain, first of all, before we get into this deal, what it is that Canadian Overseas is doing.
Well, essentially, what we do is we're in the oil and gas business. We don't deliver food. The key thing is what we have a nice asset offshore in Nigeria, and which is, we'll call it a lottery ticket. And what we've just announced here is an acquisition of a private company in Denver, Colorado, who's got a extremely nice asset in Wyoming, and it's an oil petroleum engineer's wet dream. It's a basically brand new. It's got an inclining production curve rather than a declining curve, which, as well as there's no reclamation liabilities. Was developed to the most critical environmental standards. So it ticks all the ESG boxes that people look at these days. And most importantly, it's got a productive life of about 50 years. And the only reason why it's for sale is because of what happened here in this COVID time. And usually what the oil industry does when production assets are for sale, generally they like to sell their problem children, not their chosen children. And in this case, this were his assets. One shareholder in the business. He's an oilman in the late 60s, and the drop in oil prices got him, and he's carrying some debt, right? So we've been on the look for a number of years for a good asset to buy, and this one fits the bill. We've been working on this since the end of September, and I've done the due diligence and everything else around it, and it's the real deal. Yeah.
How long is it going to take before you see some profit coming through from this deal? I mean, what is it in terms of where the asset is in terms of the?
And the answer, it's quite quickly, and once we close it. So we're set to close, as we announced here today, at the end of January. And the nice part about this, when you look at the metrics in our press release, is as well on our website, which is canoverseas.com, and we have a presentation that was uploaded after the markets in Canada closed last night in anticipation of this, and I would ask people to go have a look at it. That is that this field, the production is ramping up at at a high rate that currently the gross production is 1,400 barrels a day, and in 18 months' time it should be just under 5,000 barrels a day. And so the profitability will be instant for us, once we acquire it. And as the interesting part is that when we first started looking at this at the end of September, crude oil prices in the United States were in the high $35 to $38 a barrel, and that's essentially the reserve evaluation that we released in the press release, and it's lengthy, but it's also, we see some summary tables in our presentation. The base price for 2020 was $38.50 a barrel. Now today, West Texas Intermediate is trading at 47 and change. And one of the things that, I've been in this business since I started off, as an employee and working for a wildcatter in 1983. So I've been in this business for 37 years. This is the 5th time I've gone through an oil price cycle where it drops down and it comes back up again. And out of the 5 times, 2 of them have been due to the Saudi Arabians just pushing oil into the market, which they did here last year at the wrong time. But oil prices always go up. And what people don't understand is that the world consumes just around 100 million barrels of oil per day. That means every 10 days it's 1 billion barrels. So the the day an oil field is worth its most valuable, if it starts to is the first day you put on production, because the reserve is finite. And what also has happened is that globally, for the last, with the exception of the shale basins in the United States, which have stubbed their toe pretty hard here, there's been virtually no investment globally since the last time the price of oil hit the skids, which was in 2014, 2015. And you know, a lot of these big offshore projects have a lot of lead time to them. And so people won't make investment decisions unless they see some certainty around pricing. It's not so much around everybody's going to be driving electric cars, and we won't get into that debate on the practicalities of it, but crude oil demand, at whoever you look at forecast, is to stay at least at where it is or go up. Now, this asset and why it got grabbed our attention, and let me describe it. I have a reservoir engineer who's worked with me for 20 years almost, and he's 65 and, you know, grizzled. Over the years, everything I've shown him, he doesn't like. He kind of likes them, but we call him the black cloud. You know, like, in other words, it's not a sunny day. This is the first thing in 20 years that he's seen. He says, Arthur, we got to buy this. Like,
Right.
it is as good as it gets. And the other thing is that understanding, you asked me about profitability, is that as the production increases, then the net back per barrel goes way up. And the reason being is the operating costs are somewhat fixed on a per unit basis. So if you double the production, your net backs go up by twice. Yeah. And so it's
just a quick question about this, because I'm interested to find out a little bit more about what's happening as well with the rest of the company, because you're concentrated previously on sub-Saharan Africa. Here you now have a deal in Wyoming. Yeah. How do the two match up in terms of a company strategy?
What did I move for? Well, you know, one of the beautiful things about the oil business is, it's just a business about money at the end of the day. And a reservoir is a reservoir. They worldwide, they have the same characteristics. So if you're looking for an oil reservoir in West Africa, and you look at one in Wyoming, they have the same characteristics. Now we've looked at production acquisitions in Africa, and for a lot of reasons have had to not pursue them. And there's a lot of reasons why. And one of the big reasons is, in working in Africa, things take a lot of time. Governments like to have to approve transactions and do it politically. And let's just say in the old days, things, you know, were incentivized to get done, and we can't do that. You know, that's just, you know, frankly, it's against the law. And so, but the key, like any oil and gas business, are there opportunities in West Africa? Absolutely. But we need a production base in the business, in our business, that is solid and it's predictable. And as well, one of the things we'll call the positive things about the environmental movement that's brought to the oil and gas business is the whole issue around decommissioning or reclamation liabilities, abandonment liabilities, and those things. But for years they were ignored globally by the business. And the nice thing about this one, there aren't any, and there won't be for an awfully long time. And at the same time, and believe it or not, developing something in an environmentally sensitive way makes it so efficient that it really impacts the bottom line. And I think that's good.
Yeah. Okay. Let me just quickly, if I can, switch. And I want to bring up a chart of the share price here in London. As I said, your main board listed. In fact, if you look at the increase in share price today, it's up 26.3%. But you can see it's been an interesting ride this year. You've gone from earlier in the year down from, what was it, 0.03. The highs up here of something like around about something approaching 5 pence a share.
Sure.
What do you tell investors about where you are? You're a 6% holder in this company, aren't you? So you've got skin in the game. What are you saying to investors that have been hesitant about this? And you're finding Wyoming, and attached to that, Any message to shareholders about the fact you are now switching focus from sub-Saharan Africa to America, or are you going to keep these two legs going?
We're going to keep both of them going, and the key is that we're looking at another opportunity in West Africa right now. Somewhat, we had to push it off to the back burner so to get this one done, because this one had time constraints to it, and so the nice part about it is that one of the opportunity we're looking at in West Africa is, in some respects, is very similar to this. So what we effectively purchase is experience on enhancing the oil recovery out of an existing field, and we can take that to another jurisdiction where nobody's done it before and acquire reserves in the ground. There's no better place to go find oil if you've already found it, right? And then it becomes a recovery factor. How much percentage of the oil in place can we recover? So the other project we're looking at in West Africa is an old oil, not an oil field that's been shut in, and it needs to be redeveloped. And frankly, the way that they did this development in Wyoming, the group that we purchased it from, is exactly what needs to be done in this other country. And so what we're doing is we're buying experience, and along comes with an engineer and has done it before and knows the pitfalls and knows what to do and not to do. And so what that does is takes your risk level down. So it's accretive in many ways. As plus it provides cash flow.
Okay. Finally, just want to follow up on the other part of the question was about the share price. Just to quickly reference this share price again on the screen. And as I said, you're a 6% shareholder. How do you sell what you're doing to investors at this sort of level? What's priced in, and where do you see shares going on the back of positive news coming out of Wyoming?
Okay. Well, I think the most important thing here is that we have the most liquid stock on the London Stock Exchange. And so some people say, what's more important, share price or liquidity? The difficult thing for small cap companies is a lot of them trade by appointment, especially in the energy or mining stocks. So if you have a large position, you can't sell it, and nor can you buy a position in the market. So just before we started talking, I think today we're close to 350 million shares traded so far. There's another 2 hours and 10 minutes left to go in the market today. And if you follow the volume, we'll likely trade about 450 million to 500 million shares. That's 10% of our issued capital. So what happens is, and this is that when people hit the sell button, it amplifies the lows. But when people hit the buy button, it amplifies the highs, right? And so, for example, I had a friend of mine who he used to run a lot of money here in London, and he's retired now as a fund manager, and he's a shareholder of mine. And he said, "Why are people buying our stock?" And I said, that's actually a really good question, because it's on in the background. I like to watch CNBC every day, and primarily in the mornings, because the guys in New York doing their morning program before the market opened in the US.
Yeah.
And there's a ticker that goes across on CNBC. And where do you see? Canadian overseas, Canadian overseas, Canadian overseas. And because of the volume, it's not a price weighted ticker, it's a volume weighted ticker. And so I said, there are a vast number of people that are trading the stock and don't really care. And this sounds very crass to me. Don't really care what we do. But what they're doing, it's like betting a horse race because you understand odds, but you know nothing about horses. You understand what I'm saying? So we got a combination of people buy the stock because they love the story, and you got people that buy the stock because they know they can trade it and it's liquid. And I think the attraction to an institution, and as a shareholder, is they can come on board and they know they can get off their position, and so they don't have to discount or risk it as high as they would say someone that trades with low volumes.
Yeah. Look, we're going to have to leave it there, but thanks indeed for telling us a little bit more about what's happening in Wyoming. We look forward to more news next year.
Well, maybe you'll have me back again. But as just in closing, this is a great acquisition, and I just suggest people look at the presentation we have on the website. in the back of it is a forecast production curve from our third-party engineers. It's not from our internal one. And you see this thing just going up and starting now. And the description of what they're doing, why the fields are the way they are. There's a nice photograph showing the wind farm where they get the electricity from. So, and it's an oil country. In other words, it's Republican state. And I don't want to be too political about this, but it's not in California. Let's just leave it at that.
Yeah. Okay, look, Arthur, it's a pleasure to talk to you. Thanks indeed for catching up with us on this transformative deal, a deal based in Wyoming. That's Arthur Millholland. He's president and chief executive of Canadian Overseas Petroleum. For more videos from us here at IGTV, join us on Twitter at IGTV and subscribe to our YouTube channel.